Welcome to the B.F. Anderson Technical Report for December the 9th. We're going to be adding some new indicators this week. I'm just going to load you up with new stuff. I know it's a lot to look at, but I tell you what we really need to understand about these indicators is that they come to me over time, and I learn from different analysts and different people about them. So here's one that I'm looking at, and I think we can either add or subtract it in the future, but I think it's worth looking at. This is the percent of stocks that are trading above their 200-day moving average. Now, the rule that my good friend Bob McNabb sent me was the percent of stocks trading above their respective 200-day moving average on the NASDAQ dropped to a new 52-week low of 28.03, nearly entering the market correction zone, which is around 25%. It has only dropped below 25% 4 times in the last 10 years. 3 or 4 of those times it went below 15. So, you know, this was the look of this particular moving average situation where we're looking at percent of stocks. This means that roughly 75% of the stocks on the NASDAQ are trading below their 200-day moving average. And the 200-day is a very important moving average. So I went ahead and updated it as of today. And you can see here we've gotten quite a bounce. You know, we got down to right around, not quite to 25, and then we're bouncing. So let's just see what happens here. Hopefully this correction that we've been going through is somewhat over. Now this is the percent of stocks on the New York Stock Exchange that are above their 200-day moving average. Again, it got way down here. You know, the line I've got here is at 50%, so we're back above 50%. Hopefully the correction is over. Now you can see the correction here on the NASDAQ. You know, we rolled over, came down, broke the 50-day. Now we're getting a bounce. Hopefully, like I say, this is something important. Now, on the more important indicator, I believe, is this one here. This is the 35-week moving average. And as long as we stay in a steady uptrend above that moving average, I think it's you just can't ignore it as being a positive. Now, on the mid caps, just to kind of go through some of these indexes, again, correction, bounce. We've got the New York Composite. Again, we got the correction. Now we're getting the bounce. The question now is, does this convert to an uptrend? Now, small caps, same thing. We pulled back, and now we're getting a bounce. Now, on the S&P 500, it really held up pretty darn well. So we pulled back, getting a bounce. Then again, on the long-term indicator, which is the 35-week. Now, we look at the NASDAQ and the S&P only on these particular indexes, and so far, so good. The aggression index started to get kind of scary here. You know, we pulled way back, broke below the 10-week moving average. However, bouncing back. Now, remember what we're looking for here is, are investors more interested in the NASDAQ, or are they more interested in consumer staples, which is very defensive? Now, on our 3 economic indicators, you can see here interest rates somewhat came down, bounced a little bit, holding around that 200-day. Oil stocks, or the oil price, which is West Texas Intermediate, came down to $66 a barrel, now has bounced back up to 72. The financial stocks, along with interest rates, are almost moving side by side with each other, somewhat of a bounce. Now, another indicator we're going to look at here in a minute, but this is the New York Stock Exchange new lows. As you can see here, it got quite elevated in this recent correction. However, it looks like it's stabilizing. So the new indicator I'm going to add is the new lows on the NASDAQ. You can see here, dramatic jump in the new lows, up to 700 new lows back on last Thursday. So, you know, just be aware of the fact that we're going to be adding these new indicators. And if we see good things, we'll keep them. If we don't think they work, we'll get rid of them. Here is the inverted yield curve. You can see no inversion. However, we are starting to work our way down a little bit. I'm starting to see signs more of deflationary activity than inflationary. In other words, we got a high here on the spread, pulled back, and now we're making a lower high and we're pulling back. This is somewhat deflationary. Now we can look at also the sentiment readings, which is the bull-bear ratio. We got down below 0, meaning we're getting into extreme fear, which is good. We want to see extreme fear, because if everybody's just bullish and everything's wonderful and so forth, usually the market makes a top. This is usually where the market makes a bottom. So again, hopefully that's our correction being over. However, on the put-call ratio, we've seen a little bit of improvement here, not a heck of a lot. Junk bonds kind of worrying me a little bit. As junk bonds do poorly, it's basically saying that people don't have confidence in the economy and they're worried about default risk. Because what we're doing here is a ratio comparing high yield junk bonds to treasury bonds, which are no risk. Anyway, really kind of came down here recently, getting somewhat of a bounce. We continue to monitor that indicator. Volatility index got real kind of crazy as well. We had a dramatic jump in volatility up to a reading of 30. Now realize, back here during the pandemic, we got up to readings as high as 80. So, got a bounce in volatility, now pulling back. Hopefully this indicates some type of low in the correction. Now, on the top 5, we've got Marvell Technology, which is a semiconductor company, very much involved in the infrastructure of the internet. Good company. We own the stock. We got a nice gap up of 50 million shares traded on earnings. The stock is in a strong uptrend. Here we have On Semiconductor, another semiconductor. We're seeing a definite pattern here for semiconductors. You can see here we're in a nice little uptrend here. I would reconsider this stock. Well, I have owned it in the past, but I would reconsider it if I get some buying volume in here to offset this amount of selling volume. We'll just have to see. Pure Storage. Again, one thing about the infrastructure of the internet is it requires a lot of data storage. I mean, you think about every photograph, every Amazon account, every e-commerce account, all that data has to be stored. So this company, Pure Storage, is doing quite well. We do own the stock. Got a nice move here, got a nice gap up here on earnings. Stock is in a very nice uptrend. Ambarella, again, semiconductors. Here we go again. We've been in the stock before. Look, it got kind of sloppy in here, fairly sloppy. However, we did get somewhat of a gap up. However, that gap up failed, like a lot of stocks have been failing here. However, we bounced back. We continue to keep an eye on it. Here's Devon Energy, which is the one of the better oil stocks that we're seeing out there. This is probably the most positive pattern. So we'll keep an eye on Devon as well. So if you have any questions, please give me a call. Thank you very much.